Hello, everyone, and thanks so much for joining us today. My name is Yulia. I'm part of the customer success team here at Snap Projections, and I'm excited to go over this drop-in training session with you. This will be a live product walkthrough focusing on creating simple projections for a couple. Please feel free to participate throughout the session by submitting your questions. You can do this in the GoToWebinar portal. So if you open your portal, go to the question mark and then type your question there. I will be able to see them throughout the session and address those live or at the end of my presentation. And before I go into our application, I want to show you how you can access help anytime. Once you log in, you will notice in the top right corner of your screen a help icon that will give you an option, different options on how you can reach out to us. Help Center will direct you to our library of articles and different help resources, as well as recordings of our webinars. And you can send us a message that will send us an email, and we are very quick to respond. If you click on the What's New, you will see some of our latest updates. I highly encourage you to check it out once in a while. So you do have different options in how you can reach us. And you can also give us a call for any questions, especially if it's something quick or something urgent. We're here for you from 9 to 6 Eastern Time. All right. And also, this session will be recorded. You can always access it in our live support sessions by going to our help center, click on webinars and search for live support sessions, product walkthroughs and Q&A sessions. You can register for future ones and you can access the recorded sessions in there. You will also receive a recording of this session in your email box. And today we'll have a very simple agenda. We will create a new client with a spouse. We will review and edit planning pages. And we will also create a client report with snapshots just to look at different capabilities. So let's go and dive right in. I am now within Snap Projections. And this is my homepage where we have a list of all of our clients. And by the way, over here on the top is the help button that I was referring to previously. To create a new client, it's as simple as clicking the largest button on your screen, New Client. And today we will add a client with a spouse, but I want to highlight that over here on the side, you have a navigation panel. So we will be using it a lot throughout our data entry. So let's start. My client today is going to be Monica Gibson, and she was born in 1992 on January 1st, and she resides in Ontario. Now I have an option to add a spouse right here on the screen, but also on the top over here. It doesn't matter which one I use. So I'm going to use this one. Now, her spouse is Eric Gibson. He was born the same year. Now, it doesn't really matter which month or date you put in there. Generally, in Snap Projections, our calendar years simply start in January 1st and add in December 31st. And for most of your purposes, you don't have to add a specific date of birth. Only some of the features, such as government benefits, can be prorated to a specific date of the client's birthday. And that's where you would want to be very specific. But if you are only building projections for without even knowing the specific date, you can still come up with fairly accurate results. And let's go to the next page. Now, my client's retirement age will be 65 for both of them. And I would like to show projections until age 100. Just to start with, I will see if my client don't expect to live that long, but I don't have to change it right now. I can always come back and change it later and shorten the projections. I'm going to review inflation rates. I'm going to try using the guidelines here right now. This button is very important because financial planning guidelines are always changing. I mean, they're changing once a year, and we try to keep it updated. So right now, we're using the information from 2024. And these are recommended general inflation rates, indexing rates for CPP and OAS, rates of returns provided to us with the assumption that we need to adjust them for fees. And you will see that as I'm hovering over a little question marks, and you can see them anywhere within the scenario setup. Once you hover them, it gives you some additional information. And right here, it tells me that these percentages, these rates, are expected nominal rates of return net of fees. So I'm going to just adjust them slightly. I'm going to put 1% here, 3 here, and 5. So I am adjusting our default rates for fees. And I only need to do it for one spouse. If I switch to Eric on this side, he's going to have the same rates of return. So this screen is actually applicable to both Monica and Eric. And let's go to the expenses. Okay, so my clients have a 78,000 combined annual amount for expenses. And let's talk a little bit more about what it would mean. This amount for my clients is a combined amount that they wish to spend in retirement. I don't know how much they're spending today. This is just a number they told me of how much they want to spend in retirement. So I'm using my base expenses. This is an annual dollar amount after tax. And just for things like transportation, groceries, anything that they want and that I will not further include in the plan. So this amount will not have any contributions they would want to make in any income taxes or insurance premiums, debt payments, nothing like that. All of these things, they have a place further down the line over here, and I will consider adding them later. But this is just for what they want to spend, no questions asked. Now, my clients don't have any additional expenses, but you can use this information for anything on top of this combined annual amount. Things like buying a car every few years, or if they want to um, have a wedding for their children and they're planning to spend a certain amount on a certain from a certain age to certain age. You can change frequencies. Um, for example, buying a car every 4 years. Some people do that. So you can always select that. You can choose to highlight an expense for the purposes of our charts further down the plan. Um, you would want to do that when you know that your clients are spending a lot on something, such as eating out, for example, and you want to highlight just how much strain it puts on their financial plan. So you will have a separate column for it. You will have a separate color within our charts. I might show it to you at the end of this presentation. But for now, my clients, they don't have anything else planned, so I'm going to delete this. Mm, okay, we can go to incomes and I can click on the next page at the bottom over here, or I can use my navigation menu or navigation panel and click on incomes. Now, when we're creating a new projections, a new client, we provide you with a placeholder because most of the clients they have some employment income, so we create this placeholder for you. We just need to update the amount. And Monica actually has $90,000 that she receives annually. We need to put the annual amount here, free tax. And she's actually, this is type employment, but we have other types over here. So if your clients have other types of income, you can add a new row and select if they receive eligible or non-eligible dividend distributions from their companies that are not included in these projections, then you can add them here as an additional income line. My clients don't have that. She has 90,000. It's taxable, it's RSP eligible. I don't have to use this field from age because it's current income. It existed before this plan and it will last to the year before their retirement. If you remember, in general, we started in general, we indicated that Monica will retire at 65. So we want to make sure that on the incomes, we are showing 64. And if take a note of this little gear icon that appears every time that you hover over a cell, when you click on it, you can fine tune this age amount to a certain date in the future. So what we have here is that this client's income will end on December 31st in the year that they will turn 64. If my client was retiring mid-year, I could have changed this to, let's put June 30th. And what it will do is Snap will prorate the final year, this 90,000, it will prorate it to only half a year. So in the final year before retirement, my client would receive 45,000 instead of 90. But for this one, I'm not going to do that. I'm just going to assume that she will retire at the end of the year she turns 64. So I'm going to leave everything how it was. And for Eric, in order to enter income for Eric, I need to switch to his side by clicking the button on top. He also has a placeholder of employment income, and he's earning $80,000. Okay, so we're not using indexing. By default, it's 0%. If you know that your client is continuously receiving a raise to how much they earn every year, you can put the indexing here. If you simply delete it, it will turn to general inflation. But my clients are not as lucky with their employers. They don't have a consistent raise every year. So to remain on the conservative side, we will keep it at 0%. It's employment, it's taxable, RSP eligible, and the same story. We simply want this amount to last until the end of the year he's turning 64. And I'm going to go back to Monica because she also has a pension. Over here, we can enter defined benefit pension plans, and my client has that. So she has DBPP that she plans to start at 65. And I can simply go to this section from age 65. She's expected to receive a handsome pension of $60,000 indexed at 2.1% with a survivor benefit of 80%. Now, my client's pension plan does not support bridging pension before age 65, so I'm not making any changes here. But if your client begins pension earlier and their employer actually provides some bridging on top of the pension to supplement any CPP and OAS that will be delayed until later, you can simply change the amount, add the bridging amount on top of this one for the ages before 65. And you will see, and you will be able to later fine tune it on the planning pages as well. But for now, we can keep it like this. And proration, we will use this column when we have a proper date of birth for our client, and we can prorate the starting year of pension to client's birthday. Now, for this one, I don't have to do that. It will simply begin on January 1st of the year the client turns this age, 65. Okay, another interesting thing that I want to speak about on this screen is clients, again, can have additional incomes. And some of these, in Snap, we allow an income to be joined. So if you have, for example, if your clients have properties and they're renting, they're receiving rental income. It can be like $10,000 per year, and they're splitting it 50-50 between Erica and Monica. So I can, well, it doesn't apply to my scenario, but you do have that option if it applies to you. You can add this and you can remove it as well. Mm. Okay. Mm. Now the next one, we can simply go to assets. And similar to how we had incomes, we are creating a placeholder account for you, which is a default non-registered. It's 100% cash. Again, it's just to show you that it's there and gives you something to start with. Now, my clients have, mm, yeah, basically, they have a joint account. Hmm, it's a non-registered account. It's empty at this point of time, but it's there and it's joint. And currently, it's allocated um, 40% to fixed income and 60% to equity. And note that if the percentages do not equal to 100%, you will get these warnings prompting you to actually reconsider the asset mix until it totals to 100, and it disappears as soon as we make that change. Mm. So they do have this joint account. Mm, okay. But she also has individual accounts. RSP, mm, it's a small one. It only has $20,000 on it. And the type, I will make sure to properly select it as RSP. So it cannot be joined. Um, and it has the same asset mix, 40 and 60. All right. Um, now that I finished entering RSP, what I want to review is these tabs on top that we have. Um, I'm searching for RSP RIF tab. It has very specific settings applicable and only viewable when you have an account of the corresponding type. So for this one, I want to double check the RSP contribution room for 2024. And if we go through the screens correctly in the data entry in the scenario setup, Snap will calculate 18% of employment income. And I will only need to adjust this available contribution room if the client has some if they carried over something from the previous years. And my client actually currently has the ability to contribute 34,000 to her account, because she hasn't been capping up her plan for the longest time. Mm. Okay, and at the bottom here, I see the description and conversion age. Now, my client does not wish to convert her account earlier than at 72, but um, if she did, I would have had the option. This is the place to do it if you want to convert the account earlier. Now, you indicate the age, and the assumption is that an account will be converted to RIF as of December 31st of the year the person turns this age, so that the first payment, RIF payment, that she will start receiving from this account will actually be at 72. But I am indicating the conversion age as 71. Okay, so I am done with entering financial asset for her. Um, Okay. Now for Eric, I'm gonna switch to him on top, and let's see. Okay, so Eric also had this default placeholder account created for him, which I actually don't need. So I am going to click on this um, little bin icon to delete this account. I don't need it. I get a warning, I read it carefully, and I still confirm deletion. So what I'm left is right now is the joint account that we entered previously on Monica's side. It's the same account. I don't have to make any changes to it, but he has an additional financial asset. He also has an RSP, and that RSP has 40,000 on it. Mm. And it has exactly same asset mix, 40% to fixed income and 60% to equity. All right. And I'm going to double check his RSP. Okay. So his RSP contribution room, I need to make a change. He actually has 50,000 that he can contribute. All right. So I'm done with his assets. Now, an interesting thing that I want to add is TFSAs. Now, my clients, they do not have TFSA accounts, but if your clients do, you can take a look at, click on this tab and check the contribution room for 2024. Snap will always put only what is allowed in the current year for everybody, assuming that the clients haven't contributed to their accounts in this calendar year yet. If your client has more room, this is where you need to give it to them. So if a client never contributed to their TFSA, but were always eligible in 2024, this would have been $95,000. So I would make that change, $95,000. And I would need to do it both for him and Monica, which I actually forgot to do on the previous step. It doesn't really matter for my specific plan because they don't have TFSAs and they do not plan to open it. But it's just a good practice to go through this anyways, in case as a result of your client meeting, the client will show desire to open such an account. Okay, now my clients actually also have a real asset. So it's added at the bottom over here by clicking a button, real asset. And they actually have, it's just their home. It's a small one that they bought very recently. So the cost and the value would be the same. We're just providing some appreciation and we will indicate that this is a joint asset over here. So as soon as we do, if I click to Eric, he will also have the same home for the same value and cost. All right. And it doesn't have any capital gain tax because it's their principal residence. So it's not subject to capital gain tax. All right. Let's go to some debts. Okay. All right. So I am on Eric's side, but it doesn't matter where I add this. They do have a mortgage. They only bought the house recently, so they still have a lot under their mortgage, and it's under 5% rate. I'm not going to put any future start age because it's an existing mortgage. But if they were considering buying a property in the future, then I would have put a note here and picked a particular date when it starts, or simply put the age. Um, and currently, they're paying monthly payments and it's joint. And I'm going to also link this mortgage to their home. What it's going to do for me is if I decide to sell the property later in the plan by selecting a future sale age, then Snap will automatically pay off any remaining mortgage with the sale of proceeds of sale. Mm, Okay, now, and because this is a joint debt, it will show on Monica's side as well. Okay, that's perfect. Government benefits from Monica. We will leave everything as is. We can choose to prorate the first year of CPP and OAS payments. If we entered the correct birthday for both of them, we can prorate the first year amounts that they will receive to their birthday. Um, Basically, the payments will begin in the month following the birth month. Mm, Okay, and I'm going to double check for Eric. All right, I'm also going to prorate his. Mm, I'm going to leave everything as default, but if your clients are considering starting earlier or later, this is where you will make these changes. Um, if your clients are really close to retirement and they already received an estimate for annual retirement pension, you can put the actual amount here. And as you do, you will see a change in percentage of maximum in relation to a national average. Mm, Okay. All right. So my clients do not have insurance or RESP accounts. So I can actually skip that. I don't have to click next, next, next. I can simply navigate to the second step in the creation of the projection, which is called planning pages, right on top. Mm. Now, creating a plan in Snap Projections, it's a three-step process. The first one is the scenario setup that we just went through. Those are your starting values, uh, client information, their current account balances, and everything. On the planning pages, it can be overwhelming, but it's a place where you review your entries and where you further adjust contributions and withdrawals, where this is the place where the planning actually happens, which is why we call them planning pages. So it's crucial that you review this before proceeding to the third step, which is called client report. Mm. All right, so on this page, we have different views. Combined view will have the combined information for both Monica and Eric, and their combined expenses, incomes, their taxes, and summarized information for their financial assets, real assets, debts, and balances. So for them, in this view, you will see that some sections have these little arrows on top. The dark blue means that this section is collapsed, and you can expand it to get a different view, um, to access more information. Like, for example, we have total employment income for our clients as $170,000 per year, and I can expand to see how this column belongs to Monica. She's getting 90,000 and Eric gets 80,000 annually. Hmm. All right, and I can collapse this. So by default, on the combined page, most of the columns, they will be collapsed for you. And just toggle between different views to get a feeling of it. Hmm. Now, to view the individual side, we need to click on their names. And by default, most of these columns, they will be expanded, allowing you to do some extra things. For example, all right, so for example, Monica actually contributes $6,000 to her RSP. I'm going to navigate to financial assets section, find RSP account over here, and in the column contribution withdrawal, in the first year of projection, I'm going to click on the 0. So you see how the little hand allows me to just move my table however I wish. But if I hover my mouse over the little 0, a little finger pointing up shows up. And I can click this. There will be a little popover where I can enter my contributions. So she is contributing $6,000 every year, and she plans to do that until her retirement. So I can copy this down to age 64. I will apply this. And a few interesting things happened. First of all, these cells are now highlighted in yellow. Yellow means how we indicate an override. Overrides are explicit instructions to Snap as an application. In this case, it's an instruction to contribute $6,000 to this account, not more nor less than $6,000. A second interesting thing happened on the screen is that our button on top turned red, and we also got an message here saying that this scenario has been changed. Please rerun it to see updated results. In other words, then after I entered this change, any numbers on the screen right now, they're not real. They haven't been, this contribution hasn't been taken into calculation yet until I push this button, run scenario, which I'm gonna do right now. And you see that it will take a little bit for Snap to actually calculate to all of these different value amounts to make sure that this contribution actually happens. And it recalculated the tax amount and everything. As soon as it's done, we see this run scenario button turning green, means we don't need to click it. Everything is fresh and correct for us. Okay, now Eric also contributes $6,000 to his account as well. So I'm going to go to his side, find his RSP account, and simply repeat the steps. $6,000, copy down to age 64. This is how they're saving for retirement. Mm. And I could do multiple changes on this page before clicking the Run Scenario button. I just don't need to do it now. Okay, perfect. So we finished entering these contributions, and let's review our plan over here on the Combine page. All right, so we will take a look and just scroll down. My clients are fairly young. They're in their 30s. So, and they are already seriously trying to save for their retirement by making these contributions to RSPs. So I'm looking at the first row. These expenses currently showing $87,000. And if you remember, in scenario setup expenses, we entered 78. So it was their goal. So let's find this number on the planning pages for them and make sure that we're on the combined. So we're going to scroll over to the retirement and voila, here's $78,000. This is their retirement goal, how much they want to spend in retirement. And we can see that in 2057, they're 65. It's their retirement age. It's bolded out and underlined. And this is the point of time where we apply this retirement goal to them, as indicated by this button over here, Start Age. This start age indicates the beginning of a very valuable feature of Snap Projections called automatic cash flow management. You can read a little bit more about this feature by clicking on the blue gear icon in the column called CFM. And to learn about cash flow management, you can just hover your mouse over the question mark tooltips or read this article for more details. It will open the article for you. It will give you the details about the amount, how Snap works in order to automatically move the assets in and out of clients' accounts to meet this goal, $78,000. So by default, we're applying this number in retirement. And to explain it in simple terms, this is the client's wallet at the end of the year, how much they want to spend at that particular year, and $78,000, not more, no less. Anything more than this amount, if they had anything extra, Snap would take them, would contribute a little bit, contribute to financial assets. If they don't have $78,000 available from their pensions or benefits or anything, it will actually take the money out. As for example, here the money is being taken out from RSP in order to meet their goal. In the years before retirement, we see how the numbers are colored differently. They're not $78,000. They're 65, 66, and actually at the beginning of the plan, it's 87. So these amounts are simply calculated based on your entries in scenario setup. You have provided information about an income, about contributions being made to financial assets, any debt payments that are being made. So you entered all of this information in scenario setup. And Snap calculated the amount of tax that your clients will pay that year. And it shows you how much is left in your client's hands. In 2024, my clients had $87,000. And we assume that they simply spent this money. My clients are young, they don't have a detailed budget. Um, they don't know exactly how much they spend, but they know how much they save, and they gave me this information. So we're calculating it for them. It turns out that they're spending about $87,000 in every year. Well, it's in 2024. In 2025, it will be a little bit less and a little bit less going all the way to the retirement. Now, this column expenses, it's divided into two, real and nominal. Real dollars are today's dollars, and nominal dollars are future dollars, meaning today's dollars adjusted for inflation. So you see how nominal always grows because it's getting adjusted to the inflation. And it's much easier to see when we have a consistent, a real dollar amount over here. In today's terms, the clients want to spend $78,000, but in the future dollars, that amount will be $154,000 because it was adjusted for inflation. Okay. So I think I covered the most here for my clients. If I scroll down, I can see that my clients are in pretty good shape for their retirement. I'm going to take a look at what else this page offers to me. There are some buttons that I haven't looked at before. So for example, I can export everything as an Excel spreadsheet, where I can take a look at some charts with my clients. This chart shows how just where their money is going towards. In the years before retirement, it's just base expenses, some income tax, and they also make some contributions to their financial assets. And some of the years, so I can look at this, it's very interactive, our charts. You can hover your mouse to highlight something specific, like focusing on how much income tax they pay on debt payments. Or if you would like to exclude something, you can click on this and it will just disappear from your chart. And just hovering over a specific date will show you additional details. And we have charts for outflows, inflows, net worth, and also asset allocation chart, which you can adjust for different years into the future, how their asset allocation changes. Okay, another feature that we have here is recommendations. It's a different model You can learn more about this feature by clicking on this button, and we have a very thorough article that goes into details. I'm not going to go into this at our presentation here, but in a nutshell, it gives you an information about your client's retirement goal. So they're planning to, it summarizes again. Monica and Eric want to retire at 65, and they want to spend this amount in real dollars. And here we have a status that they're actually overfunded, meaning that they have, if they continue with every entries that we've created for them, they will have more money than they need. And it gives you an amount for surplus and the goal progress 111%. So it can mean different things. For example, your clients can spend more in retirement, and we can calculate how much more. We can use that as a calculator. So we're just crunching some numbers to see if they can spend more than this amount. And it's they can spend in retirement 84,000, which is 6,500 more than the current plan. Or let's take a look if we have a retirement age. Maybe they can retire earlier. Let's see. We can simply calculate. We don't have to apply. We just want to see what options your clients have. So the answer is easy. They can retire at 61 if they want to, which is 4 years earlier. You can simply calculate without applying and running by clicking on this button, or this button will change your projections that we have behind this model. And if we want to prevent those changes, we can copy this scenario before applying the recommendations. So I'm going to actually do that. I'm going to copy scenario before applying recommendations and click apply and run button, because I want my clients to focus on spending more in retirement. So what it did on the planning pages combined, it replaced my $78,000 goal with this new amount over here. And it also created a copy of my plan. As I can see in the name right on top, base scenario, it added the information as sustainable spending. If I want to go back to my original one, which I do, I can click on this hamburger icon. I can select switch scenario, and I'm just going back to my base scenario. So this is the list of all scenarios that I now have for them. And these icons, they're just shortcuts. The gear icon will take me to scenario setup. The table icon will take me to planning pages. And this icon will take me to client report. So I want to go back to the planning pages for my original scenario. So I'm going to click on that icon. And I'm going to navigate down and back. So this is my original scenario, my 78,000 goal. And again, in the recommendations, everything just stayed the same as I left it. I'm not going to run these two options. They are very interesting for very specific scenarios that you can read in the article. Or we also have other webinars available that you can look into. I'm going to close this one. Another thing that Snap offers is actually this drop-down menu under Run Scenario. And you can do some stress testing. Um, do that for some of the clients who um, are not content with using the same rate of return or the same inflation rate throughout all of the projections. Like, for example, we're planning 70 years in the future, and we're still going with the same basic inflation rate. We know that that's not going to be true. It's going to be changing. So, if you want, you can run a stress testing as a historical scenario or a randomized scenario to vary these inflation rates and rates of returns on cash, fixed income, and equities. Now, this is an add-on feature. You can learn about it by clicking on this button. It comes at an extra cost, but if you are on a free trial, it is free for you to try. Just explore this. Mm. Okay, before I finish this presentation, I do want to check out the third step, which is client report. If you click on it, you come at a magical place where we are creating the actual deliverable for your client if they want a printed version of the report. Mm. We have on the side, you will see some navigation menu, and we have a lot of pages available. You don't have to include all of them. You can always modify this. It's very customizable tool, probably one of the best on the market, but everything starts with a cover page. You can change different backgrounds on the side. You can go with a simple white or some pineapples. You can make some changes. Everything is editable. You can update your logo. You can save it for any of your future scenarios. So it's very, very flexible. Your reports are available in English and French. You can easily switch between the two. And my advice to you as you're learning Snap, just simply go through every single page and review what it offers for you, just the capabilities of it. Now, okay, so just click on them and review. These are editable fields for your client. You can always add new notes. We have template variables on the side that you can use. I'm not going to go into details on how it works right now, but feel free to reach out to us. Or if you click on the help icon, instant answers, chances are you will get a very useful article suggestions here right now, such as creating a report. So I'm going to open it in a new tab. Sorry. I'm going to click on it and it will open for me in a new tab. And it will explain me everything, how to use it. Okay, and I can click on a report preview. It will generate a report for me. Okay, so right from the start, do you see how this logo on top, right now it has this white background. If your logo actually has some transparent background. In Report Editor, you can go here, Cover Page, and apply transparency. Just make sure it's selected. But I don't think this logo actually has transparent background. So it will still stay white. But this option is available to you. And on this page, this button, Report Preview, you can preview the report to make sure that it looks nice. To identify areas where you would like to add some comments, because, for example, this recommendation summary is empty. I can go back to Report Editor. In my navigation panel, I will find recommendation summary, and I can add some notes here. It's just a text editor. I can format it in a different way. I can underline things. I can create different lists, or I can create action items. Like this. And once I do, I can go back to Report Preview and take a look at it again. So see how it updated this information here. So don't forget to do the steps, otherwise your clients will be left with some blank pages here that they wouldn't understand what it is. All right. I think this actually concludes our presentation for today. And just to summarize, we created a client. So on our page, we now have Monica and Eric Gibson right on top. We created actually two scenarios for them as indicated by the number over here. I can click on it and I can see the list of them. We have base scenario and base scenario sustainable spending. We created these. We reviewed planning pages, discussed different additional options for available to you, such as recommendations and stress testing. And we also created a report for base scenario. Another feature that is available to you when you have multiple scenarios for the client, or even just one, is you can compare them by using this button over here. And comparing scenarios will simply show you the differences across the various metrics, like this base scenario where they had different spending. 1 second. I'm going to select metrics to show. My clients don't have corporations, so I'm going to hide this one. But they have retirement spending, and I want to show it in real dollars or nominal dollars. I can toggle at any time. But $78,000 for one scenario and $84,000 for the sustainable spending, which is more, but how it affects my plan down the road. It will affect the personal estate that they will leave. And I can look at it in a table format or in charts format by clicking on the trend icon. So it will just show me different things. I can always review to see how they are different. And should I want to, I can simply select print. All right. That is it for today. Thank you so much for coming to our presentation. And this will be a recording of this session will be made available to you in our webinar section of our Help Center. Thank you. Bye for now.